Hey guys, here with another episode of Crypto and Coffee TV. It's May 29, 2019, and we are in another crazy period of Bitcoin. Right now, we're kind of experiencing some consolidation the last day or two, waiting for that breakout, whether it's the upside or the downside. I don't think anyone can be fully sure, but I think the amount of FOMO that is in the market right now is starting to really snowball. And as everyone who's been involved in the crypto space for a year or multiple years should hopefully know by this point, FOMO has been a massive driver of market prices. Now, I think one of the changes that we're underseeing this year, or at least how people are trying to speak about Bitcoin, is that we're seeing more legitimacy come into the space. Primarily when people speak about financial legitimacy, they're really looking for institutional, regulated, large corporations that are already validated in the financial sector of the United States to be entering in and putting a lot of money up, which gives it, oh wow, if they're getting involved, there must be something very legitimate about Bitcoin. It must be in there for the long haul. And that really improves consumer trust and confidence throughout the world. Sadly, I know a lot of us coming from the crypto space, a lot of our thoughts and reasoning and philosophy and beliefs for why we think cryptocurrency, Bitcoin, is such a great thing do not necessarily align with a lot of the interests of the institutional investors. But it's a good thing to see. I think that's really where a lot of our strength and bull market is coming from at this point, or at least the additional leverage that we need after the past month or two. So I'm excited for more institutional adoption as well. Let's go ahead and get into one of our first articles here. So Bitcoin whales are reportedly accumulated 450,000 BTC in the last 9 months. And I think for me as an investor, when a lot of people were getting scared, selling holdings, and getting out of Bitcoin, and I was slowly reaccumulating, buying the dips, price averaging down, and now I've again found myself in a great position after a bear market. I think a lot of the institutional investors were doing exactly the same thing. And as we've talked about with CNBC, their kiss of death, how often they're horribly wrong. I think last year was a situation where a lot of mainstream media was very negative and talking down on Bitcoin and trying to really highlight any issue or small hiccup, any really negative news, and dwell on that and push that. But at the same time, in the background, those institutions have been picking up Bitcoin at a cheap price, putting themselves in an excellent position where they are currently. Seeing that over 450,000, $3.8 billion in Bitcoin have been picked up by institutional large firm accounts is showing that they're generally ahead of the curve for a reason. And I really feel like a lot of these financial companies, they almost enjoy pushing or motivating those mainstream medias to be more negative and highlight some of their loudest voices that are negative on Bitcoin while they just slowly pick away and accumulate. Now when they want to go positive and they're ready to launch some of their different user interfaces and investment tools and all of that to get into crypto, wow, they're so unbelievably positive. So I hope a lot of you guys weren't burned during that period last year. I definitely think we're going to see additional dips in the market where there will be excellent opportunities to buy. I don't know if I'd say right now is an excellent opportunity to buy. If we see this kind of run fall apart for a second, if we don't go anywhere in the next day or two, I think we're going to see a bit of a pullback. I wouldn't be surprised if that pullback was somewhere in the 7,000 range, and that would be an excellent time to buy. If we see this thing jump, hit 9K, and take a run to 10, I don't know. There may not be too many low dips coming this year. So one of the things that have also been supporting the fact that these whales or large institutional buyers are continuing to become larger holders of Bitcoin is that the firm size addresses are greatly accumulating in Bitcoin. So here we go. We have a blockcrypto.com article. Basically, as Bitcoin reaches prices similar to August 2018, the number of firm size addresses has greatly increased. It basically aligns the same with the previous article. About 430 to 450,000 BTC have been accumulated by firm size addresses. These are addresses that hold greater than 1,000 BTC. Retail size wallets have basically remained about the same. They have increased their BTC amount by about 126,000, but that's continuing to keep retail adoption at about 38%, which I feel is pretty good. And what I've always wanted to see is exchanges to hold less volume of Bitcoin, because I think exchanges are trying to make the quick penny. They already have a lot of money coming through. They're trying to make profits day to day. It's not necessarily the best for the future of Bitcoin stability and fundamental value. So it's nice to see the overall exchanges volume coming down. So last year in November of 2018, the exchanges were holding about 20% of the volume. Now they're down to about 16%, while firm and large custodial companies have increased to 47 or 46%. I think that is very important for Bitcoin. The more Bitcoin we have in the hands of active traders, trading institutions, long-term investors, that's going to do well for the fundamental and foundation future of Bitcoin. If exchanges soak up more of the volume and everything's going on there, that's usually a very poor thing to see with a cryptocurrency. You see that happening with a lot of alts, getting stuck with really big numbers existing on exchanges.